So yes, there is a rotation going on right now. I do think longer term, like Kenny said, you do want to stick with the AI trade. Palantir is my favorite name in the universe right now. So I am long AI going forward. That doesn't stop me from trading around my core position.
Ask you, what are the trades that you're eager to make? What are the buys that you are dying to make? You just need to see them come down to a certain level, Sarge.
Outside of Palantir, gold, silver, uranium, electricity through the utilities. Like I said, the commodities-based trade is going to be the trade for the second half of the year.
Well, let me just drill down on Palantir, which of course has done a lot of government work, but now expanding exponentially into the consumer world. They've got all kinds of big data deals with the Cleveland Clinic and a bunch of different health clinics and businesses, right? I mean, but it's still pretty rich, 74 PE.
It's rich, which means something's off. Maybe they're pricing in future margin. That's what I'm hoping. Underneath, the operating cash flow, free cash flow, and the balance sheet are as strong as any firm I have ever seen for a company that size.
This is Stephen Guilfoyle, who just put out that $31 price target for Palantir last week. Now, as noted at the interview, he likes Palantir for the long term, literally saying it's his favorite name in the universe as an artificial intelligence play. And drilling down into Palantir, he's got to point out, though, that rich valuation, hoping that they will actually grow into it, and continues to note the fundamentals around their cash flows and balance sheet as one of the best he's seen for a company their size. And I think this interview, even though short, points out what a lot of investors are kind of torn over, right? Palantir, we know, is still needing to grow into its business and figure out how to make it grow at a faster rate. But being able to do this while maintaining their cash flow, which ultimately contributes to their growing cash pile, is so attractive because it's almost like the best of both worlds if they actually achieve this, the hyperscaled growth. Who wouldn't want a fast-growing company that continues to pile up cash operationally, therefore having no risk of basically ever getting into taking loans, needing to further dilute, or go into bankruptcy? Now, the dilution is still happening, of course, presently, which is a contributing factor to their cash flow. But still, for those trusting management, see the strategy playing out better in the long term for more motivated employees and talent retention. And of course, down the line, if things really blow up, technically they can buy back shares. So in theory, you can think of it as a long versus short-term strategy that's still playing out. And also, we typically associate growth stocks with cash burners since the cash of kind of super drives this. But Palantir has been in this position of being quite conservative here. And we know they continue to grow that cash balance and their short-term treasuries to at least get a guaranteed rate of return, even though a bit small. Now, I know this can be a touchy subject where folks want them to use that cash for higher ROI activities, but obviously there's a risk involved with that too, since there's no guarantee on what exactly they can get back. Like, say, supercharging sales staff or acquisitions or buybacks, which they actually did do a tiny amount last quarter, but essentially zero at this point. So Guilfoyle is still super bullish in terms of his price target, but seems to really like those aspects around Palantir's business specifically. However, he still remains in the wait-and-see boat for Palantir to prove they can grow into the valuation they are right now. But what are your thoughts below? And I'll see you in the next video.